Yeah, I know the hair is out of control. It's called the Roni Baloney. Holy smokers, guys, look at that market today. Oh, it's just another day in the stock market. The Dow Jones Industrial Average just down 4.44% today. A lot of fours out there, down about 1,000 points. Just a normal day for the Dow Jones Industrial Average in 2020, I guess you can say. S&P 500 down 4.4% as well. NASDAQ also down the same exact amount. Just one thing I want to point out is that is weird, okay? That is very, very strange. It was funny because just like a week or two ago, I pointed out that it was weird how much the correlation was different in the indexes, and then a day like today, almost exactly the same in S&P 500 and NASDAQ, literally the same exact. It's very rare you see that. That's all I'm going to say about that, okay? So in this video here today, we're going to talk about the stock market, and if this stock market is a bull trap, and I've seen a lot of videos on YouTube recently about this. I've seen a lot of discussion on obviously the big financial networks talking about specifically this term known as the bull trap, and if we're in a bull trap in the stock market right now. And the reason you're hearing this term a lot, bull trap, is because essentially we bottomed out in the stock market in terms of Dow Jones Industrial Average. We're going to look at that index rather than the S&P 500 or the NASDAQ, just for simplicity's sake. So for the Dow Jones Industrial Average, it bottoms out just about a week and a half ago or so at about 18,300. That was a range that the Dow Jones Industrial Average kind of closed at that particular day. Then we rally hard off that. We rally about 4,000 points, and the market was trading like in the 22,000 range very recently. And when you get a move up like that, a lot of people are wondering, is this something that is going to trap bulls into thinking, oh, we're in the clear, the market's on the recovery, everything's good now, okay? So if you want to kind of know my definition of what a bull trap is, it's basically a market that sucks in traders in sideline longs to buy in, thinking, oh, we're clear now, it's all good to buy. So essentially you have a lot of traders in the market that try to trade around the market, the ups and the downs in the market. So you might have some traders, you see a move like that and think, okay, we're going to keep moving up, keep moving up. So some traders end up getting involved in a situation like that. Some end up getting thrown out. And then you have sideline longs, essentially, what I like to call, people that aren't necessarily in the market right now, but are thinking about getting in, but they're looking for that all clear sign. And when you see the market move up 2,000 points, then 3,000 points, then 4,000 points off the lows, definitely a lot of that sideline long money can end up coming in the market. And it's not just like it's individual retail investors, the average Joe at home. This is like funds as well, like hedge funds thinking, okay, maybe we're in the clear now. Oh, I got to deploy some money out, because what if we start moving up huge when the Dow all of a sudden goes to 24K, 26K? What if it goes back to record highs? Oh my gosh, I can't miss out on that opportunity. And you see more and more longs pile in, and that's what they call a bull trap at the end of the day, okay? Now, bear trap is essentially the same thing, but opposite, okay? It sucks in traders and short sellers to thinking the market will continue to go down. You're not hearing this term talked about pretty much at all right now. You're not hearing people talking about, is this a bear trap or something like that? Like pretty much all the content I'm seeing out there right now that's getting views and getting notoriety, it's all stuff discussing whether we're in a bull trap or not. So we're going to go ahead and talk about what is this particular market we're in right now. Is this a bull trap or bear trap? I'm going to give you my personal opinion on if we're in a bull trap situation right now or a bear trap. So I hope you guys enjoyed today's video. As always, yesterday's video is up to 5,818 thumbs up. I'm going to be honest, I don't think there's a chance you guys are going to beat that thumbs up record, but hey, everybody loves an underdog story. Maybe you guys can do it. So smash that thumbs up button, leave me a comment down there on what you guys think about this whole situation, okay? So if we're thinking about bull trap, bear trap, let's get the easy one out of the way first, okay? If you're thinking about from a long-term perspective, is the stock market right now a bull trap or bear trap? This is the easy one. Everybody should be saying it's a bear trap, okay? If you're looking at it from a long-term perspective, if you're looking at this from the next 5 years, 10-year perspective, it is obviously a bear trap, and it's always a bear trap if you're looking at it from a long-term perspective. I mean, we're going to go back. Look at what the Dow Jones Industrial Average was at 100 years ago. It was at 86 points, right? If it was at 860 points, it would be a 10x. 8,600 points, we're at 100x. 17,200 is a 200x. So I have heard some talk that people are talking about maybe the Dow goes back down the 17,000 range. even there it'd be a 200x plus, okay, on a basically 100-year basis. So obviously every single market that has happened has always been a bear trap scenario if you're looking at it from a long-term perspective. If we just go back the past 40 years, 40 years ago, what's the Dow trading at? It's trading under 1,000 points. So we're at about 20,000 right now, a little more than 20,000. There's been over a 20x in the Dow Jones Industrial Average just in the past 40 years, okay? Now keep in mind, there's been some stocks out there that have performed way better than 20x over the past 40 years, but even if you have your money in just something that's mirroring the Dow Jones Industrial Average, 20x, and S&P 500, you're going to get something somewhat similar. Meanwhile, what has happened to the dollar over that time? Well, in 1920, $1 was equivalent to basically $13 now, okay? A massive difference. The dollar has basically fallen through the floor over the past 100 years. Like that's a dollar is just not worth nearly, even remotely as close to as much as it was 100 years ago. Even if we go back to 40 years ago, we compared the stock market and what it's done over the past 40 years. Look at the dollar over the past 40 years. You need $3 plus now just to equal what $1 was in 1980, which was 40 years ago. So think about it in this context, right? Imagine there's a baby born in 1980 and their parents are doing pretty well, so they put $100K away for that baby and they put it into a bank account. Doesn't earn any interest or anything like that. It's not invested, it's just in a bank account. And when that child turns 40 years old someday in 2020, right? Well, that child's going to get that $100,000 that the parents put away for that child. But here's the thing. 2/3 of that $100,000 was lost over those 40 years. 2/3 of the value was lost. That $100,000 used to be worth $300,000 plus. Now it's worth, $100,000, which it lost 2/3 of its value. And let's imagine that same exact scenario, but instead the well-off parents put $100,000 into something that mirrors the stock market, right? And the child can get that when they turn 40. Well, they just got over a 20x return on investment, a massive, massive difference. So just at the end of the day, if you're thinking about it from a long-term perspective, it's always a bear trap. There's no debating that. There's no debating that on a long-term perspective, it's always a bear trap scenario in the stock market. But what we're going to focus on is the short term. We got to focus on the short term. That's what everybody wants to talk about right now. Obviously, in a situation like this, everybody wants to talk about the short term and are the bulls getting trapped? Are the bears getting trapped? In the short term, okay? So in order to understand something like this, we got to understand what makes stock prices go up and down, okay? Stock prices at the end of the day, and it hurts me to say this, it really hurts me to say this, stock prices are based upon perception. Perception is the number one most important thing in valuing anything. A person's perception. It doesn't matter if you're talking stocks, real estate, anything across the board, it is perception. Fundamentals come in second place. And that hurts me to say that as somebody that's a fundamental investor and loves to look into business models and all these sorts of things. At the end of the day, fundamentals are second, and perception is the most important thing if you're thinking about what a stock is worth, what the stock market is worth, and what anything out there is worth. Why is some guy willing to pay $10,000 for a bottle of wine when this other person thinks this other bottle of wine's just as good and it's $20 at the store? Like what is that? It's a perception difference. Why does some a guy go spend $300,000 on a new Ferrari versus why not just buy a Toyota Corolla? Because his perception is the Ferrari is like a life-changing thing to his life, and it's going to be so much better than that $20,000 Toyota Corolla. It's all perception in the end, and perception is what dictates everything when it comes to value, including stocks. Fundamentals and all those sorts of things, as much as that pains me to say, it is secondary. This is why you get a stock like Tesla stock that some people believe this stock should be valued at zero. Literally, there are people in the stock market that think Tesla stock should be valued at zero. Some really aggressive short sellers think this is a $0 stock. Other people are like, this stock should be $100 at the most. You got other people saying, it's valued properly here. You got other people saying this should be a $3,000, a $7,000 stock today. Today, okay? You have such difference of opinions. Why do you have that? Because everybody's perception is different. One person says it's worth nothing. One person says it should be the most valuable company in the world. Amazon stock. I've looked into Amazon for the past 10, 11, 12 years, always loved their business model. But from my perception, I've never been able to get in the stock because I've always believed it's been too richly valued. Here today, Amazon stands at a 66 forward PE. And this is after the company's already a massive company. I just feel like the perception from me on Amazon it's always been too richly valued. It's always been overvalued despite how much I love their business model, how much I love Amazon's retail and how I think it's going to continue to expand. Just the valuation on Amazon, it's too high. But guess what? I was saying that same thing 10 years ago when I was first looking into this stock, and it was $100-something a share. And here it is today, it's $1,900 a share. 10 years later, it's over 10x since I was looking into this stock back in the day, right? All because my perception was different than the markets. The market said, you know what, just wait to see what type of numbers we're putting up 5 years from now, 10 years from now. Who cares about valuation? Perception is so vital. General Motors stock, some people are willing to pay $30 for the stock very recently, right? Here today, it's trading at 19. I'm not willing to buy General Motors stock no matter what price it's at. If General Motors is $2 a share tomorrow, I'm not buying it. My perception and kind of what I look at in fundamentals, it just doesn't align with the company. So it doesn't really matter what stock price General Motors stock is at tomorrow. I'm not buying it. It's just from my perception, it just doesn't make sense to buy. Why somebody else would say, gosh, if it was at $2, I'm loading up. I'm gonna sell everything to go in that stock, right? It's all perception. Kilroy was a stock that just a couple years ago was trading at $100, then $200, then $300 a share, and there were people actually buying the stock at those prices. It was ridiculous. The perception was so ridiculous. Now the perception is people won't even pay $6 for the stock. People won't even pay $6 for the stock when a couple years ago people were paying $100, $200, $300 for the stock. That is how perception changes over time. And it's not just stocks, it's any asset class. I mean, you can look at obviously cryptocurrencies. Bitcoin, 2016, people aren't even willing to pay $700 for Bitcoin. I mean, Bitcoin is trading at $500-600, right? Then you fast forward a couple years, all of a sudden people are willing to pay $20,000 for one Bitcoin. And now the perception is Bitcoin's worth $6,600. Perception changes all the time. It's a big tug of war game. And if you're thinking about, are we in a bear trap or a bull trap? It's perception based. And I think this just has to be understood before you can even perceive how, whether we're in a bear trap or a bull trap scenario. It's all perception and it's one big game of tug of war. So if we're in one big game of tug of war, then who's got the ammunition? Who's got more ammo on their side? Okay, and we're just talking about the short term. We're not thinking about long-term trends or anything like that. We're not thinking about 5 years from now, 10 years from now. We're thinking about right now, okay? So bear ammo, bull ammo. Let's go over the bear scenario first. The bears, they got a dang strong case, okay? I'm gonna be honest, the bears are loaded, and I mean loaded. They got ammo out the wazoo right now, okay? The Rona numbers are going to get worse. The bears have this on their side. There's no question. Like the amount of Rona cases is going to go up. The amount of Roni, unfortunately, deaths is going to go up. The Roni numbers just in general are going to go up. They're going to get worse. And so if you're thinking about fear in the market, uncertainty, all those sorts of things, it's all going to get worse. Like there's just no question about the numbers are going to get worse. There's no way like today, like the numbers stop getting worse or something. No, the numbers will continue to get worse for a while. Eventually they'll come down, but they will continue to get worse. GDP in Q1 and Q2 will be the worst in the United States of America's history. Okay? I mean, there's no question about that. The question is, how bad are the numbers really going to be? There can be a lot of debate around the specific numbers, but the facts are GDP will be the worst in Q1 and Q2 ever. That is a really strong argument if you're coming from a bear case scenario. That literally right now in next quarter, we're going to have the worst GDP numbers ever. You got a lot of ammo on your side as a bear right now. Unemployment might go to the highest ever. There's talk that unemployment rates could go over 30% at their peak within the next month or two. That would be an incredible number. That would be way larger than the Great Depression if that happens, okay? Way larger. And regardless, even if it doesn't go to some number like a 30%, even if it goes to, let's say, 15%, That's way worse of a number than what happened in the financial crisis, the Great Recession. The last time we had a major recession, right, which was 2007 through 2009. Unemployment peaked around, I think it was around 10% there, if I recall, around 10% roughly. They're talking about this one at least 15%, maybe 20% at its peak. And once again, some people are talking about over 30%. So regardless, it's going to be one of the highest numbers ever, if not the highest number ever. And so as those three things being your pillars from bear case, and then you can talk about debt and how the dominoes are falling the wrong way and how maybe debts won't be paid and that could cause banking problems and financial system problems in general. You can go through a lot of small details there, but those three are powerhouses. Those are the three powerhouses that you have if you're a bear and you're betting against this market and you believe the stock market will go down here, over the short term. Okay, it's a damn strong case. That's all I'm gonna say. That's a damn strong case. Okay, now let's go ahead and talk about the bulls. What do the bulls have for ammo on their side? Okay, so as a bull, you have a few things on your side. One is the market's already down huge. The stock market has already fallen a lot. It doesn't mean it can't stop falling. It could absolutely fall more. It could go down to, back to the 18,000 range where it was just a week and a half ago, right? It could go down to 17,000, 16,000. It could go down to 15 to 14,000, which would mark a 50% move down in the stock market, which would be very similar to what we saw during the financial crisis. We saw basically a peak to trough of about 50% in the markets. And if we went to the 14 to 15,000 range in the Dow, guess what we're at? We're at about a 50% down move there, peak to trough. But as a bull, at the end of the day, you can say, man, the market's already down huge. And it is. It was the fastest 30% plus fall in the history of the stock market. So you can say a lot has been priced in. The other thing you have going as a bull is a Fed backstop. Now, the Fed can't backstop everything. Right now, people can't even go out and spend money. Literally, if you want to go out and spend money, good luck. You want to go to the restaurant? You can't. You want to go to the mall? You can't. You want to go watch a show or something? You can't. You want to go to the bar? You can't. You want to go to the club? You can't. And so you're just in a situation where you can't spend money right now, so the Fed can only backstop so much. But at the end of the day, the Fed is flush. They're flushing credit out there. They're doing everything they possibly can in their power to keep the situation from getting out of hand. They're doing everything possible. I mean, we just got a $2 trillion stimulus package. The federal government, the Fed, they're in a scramble to do everything possible from keeping us to go into a elongated, massive mess. Let's just put it that way. So you have somewhat of a backstop there. Can't stop it all, but it can definitely kind of hold some things back in a good way. Let's put it that way. Okay, you do have the fact that the economy is going to restart soon. That is something you have as a bull. The economy should restart. I mean, you can see some businesses possibly starting to get going within the next few weeks to maybe the next month, as far as some businesses getting up and rolling. But I would expect, and I think most folks expect, businesses to be up and running within the next 2 months. I think it would be a long shot to think we get into June, July, and things still aren't going. I think that's a long shot now at this point in time. I think absolutely the economy will get restarted somewhat soon. The question is, how soon does the economy get restarted? But it's not going to stay down forever. At some point, we're going to get things rolling back the other way. So as a bull, you have that in your camp. And also, the other thing you have in your camp as a bull is the stock market is likely going to jump back before numbers ever jump back. So before unemployment rates get a lot better, before GDP improves drastically, or anything like that, the stock market's already going to have made likely a big move. We saw this in the financial crisis. If you go back and go look at stock charts during the financial crisis, market bottoms out around February or March of 2009. Wasn't even close to being the bottom of things in general. It really wasn't. Unemployment rates got far worse. Company earnings were a disaster throughout 2009, and a lot of companies were even moving into 2010. And so you had a situation where the markets already started to jump back big, and the numbers hadn't even reflected the jump yet. Just the stock market got a jump on everything, and that happens a lot. So as a bull, you can say, well, the stock market's gonna come back. The Dow Jones Industrial Average, the S&P 500, the NASDAQ, and countless stocks are gonna start jumping back before the numbers even show that things are good or getting better. Let's not say good, but just getting better. So that's something you have in your camp there, okay? So, in my opinion, when I kind of look at both these cases, and they both have very strong cases, in my opinion, the Bears should absolutely be in control for the next couple weeks. In my opinion, the Bears should absolutely be in control for the next couple weeks. Their case here for the short term, it's just too dang strong. In my personal opinion, it's just too dang strong to overcome in the short term for the next, let's say, few weeks, okay? And in my opinion, if the Bears really control this, and by control this market, I mean we go back to that 18,000 level on the Dow. Maybe we move down to 17,000 or 16,000. If the Bears really get control of this market over the next few weeks and we see some huge downward moves and it's consistent pain in the market, if we can see that for the next few weeks, then in my opinion, the bulls will take back control of this market in the back half of April and moving into May. I believe that if the Bears keep control of this market like they have right now, I believe the market will eventually bottom out sometime around when the economy starts to get restarted, which will be May. And before you ever start to see a reflection in the numbers starting to look better, just the fact that the economy in general will get back up and running, I think that is just going to be a big confidence boost out there to everybody in the marketplace, whether you're talking about the hedge fund manager with $50 billion under assets, whether you're talking about the retail investor, anything across the board. Just getting back to business is going to be a big confidence boost, and it will change the perception big time. Perception, when people can't even do business right now, for the most part, a lot of these businesses can't even do business, the perception is so negative in a situation like that. It really is. Because what do you have to go off of? You every day you're in your house and you're like, man, my business is down, or my business isn't making any money unless maybe you run a grocery store or you own Costco or something like that, right? Countless businesses are not doing business. The perception is very negative. So if the Bears can take control of the market, throw this thing down a few thousand points, maybe 2,000, 3,000, maybe even 4,000 points over the next few weeks, which is very much a possibility, then I believe bulls will take back control in May before the numbers ever even say anything good in that things are getting better or something like that. And one of the biggest things I would love to see in this whole situation, I would love to see the $1 trillion boys club get thrown around a little bit, much harder than they've been. They've kind of, a lot of people have hidden out those as the safety stocks. I would love to see those stocks get thrown around big time over the next few weeks. And not just from like a buyer's perspective of thinking like, oh, let's buy a stock, but I just feel like, I just have this feeling that in order for us to really clearly reach a bottom in the market, I feel like that $1 trillion boys club has to get hurt more. There has to be more pain there, and there has to be a lot of those funds that say, gosh, I even have to sell Apple stock. I even have to sell Google stock. I even have to sell Microsoft stock. I think if we get to that type of scenario, then we're really talking about, the very much a possibility of a bottom coming very soon, okay? But at the end of the day, guys, my motto is take advantage 2020. So make sure you're taking advantage of all these great deals. Will continue to get thrown at us throughout 2020. And, April could be a crazy month. We'll have to see how it all shakes out. I've got a free resource for you guys down there in the description. It's the 7 Sins of Stock Market Investing, 7 things to avoid in 2020. If you want to check out that, go ahead and check out that, and we'll send it over to you for free. Thank you for watching and have a great day.